Some people invest every month for 5 years and still feel anxious every time the end of the month arrives. Meanwhile, someone with a much smaller portfolio can sleep peacefully because their life has more margin than volatility. Strangely, the people most obsessed with money are often the ones most afraid of losing it during every market drawdown. And it is usually not because they failed at investing or misunderstood long-term compounding. Modern life quietly turns everyone into a full-time worker just trying to patch financial leaks every month. Your salary increases a little, but your free space never really expands with it. Then inflation quietly moves even faster than your new income and compresses your entire time horizon again. The internet keeps telling you to start investing immediately as if your financial foundation is not already under stress. Welcome to the margin, where the real problem is usually not income alone but the space left after survival. Today we explore why investing alone often fails to stabilize life long before the market even begins to move. A lot of people believe investing is the escape route from financial pressure and unstable modern life. Some people download stock trading apps before they even build a basic emergency fund. They buy ETFs while credit card interest quietly compounds faster than their investments ever could. Many people keep dollar cost averaging while their paycheck disappears almost the moment it arrives. On the surface, all of this behavior looks disciplined, responsible, and financially productive. But often they are just using investing to temporarily quiet financial anxiety and uncertainty. Investing feels like progress because numbers moving upward create the illusion of control. Meanwhile, their real financial life stays fragile beneath the polished investing routine. The real problem is rarely investment returns or market volatility by themselves. The bigger issue is whether someone has enough financial capacity to survive unexpected setbacks. Compounding only works when people have enough time horizon to stay invested through difficult periods. But most households barely have enough breathing room to survive even 3 months without income. That is why even small crises can completely destroy long-term financial plans and investing discipline. Sometimes the trigger is something ordinary and boring, like a flat tire during a stressful month. Other times it is a market drawdown that forces people to liquidate investments at the worst moment. And once investments become survival money instead of long-term assets, the entire game quietly ends. This is the part most people avoid because the math quietly becomes uncomfortable. A lot of people actually earn decent income but still feel permanently behind. Their fixed expenses slowly consume future income before compounding even has time to work. Apartments now cost so much that rent quietly reshapes entire life decisions. Even normal cars now feel like long-term financial commitments instead of transportation. Insurance costs rise quietly every year while nobody really notices the compounding effect. Living an average modern life now feels strangely expensive in almost every direction. That means investing now has to compete against your entire lifestyle at the same time. Imagine investing $500 every month with a disciplined, long-term mindset. An average market return around 8% sounds reasonable on paper. And honestly, that number usually feels optimistic enough to keep people motivated. But lifestyle inflation often rises even faster at 10 or 12% every year. In many cases, compounding loses momentum before it even meaningfully starts. Most people never notice because the system feels normal while the math quietly changes underneath. Everything around them still looks completely ordinary, so the warning signs stay invisible. Then one day 40 arrives much faster than their financial stability ever did. This is the part most people avoid because the math quietly becomes uncomfortable. A lot of people actually earn decent income but still feel permanently behind. Their fixed expenses slowly consume future income before compounding even has time to work. Apartments now cost so much that rent quietly reshapes entire life decisions. Even normal cars now feel like long-term financial commitments instead of transportation. Insurance costs rise quietly every year while nobody really notices the compounding effect. Living an average modern life now feels strangely expensive in almost every direction. That means investing now has to compete against your entire lifestyle at the same time. Imagine investing $500 every month with a disciplined long-term mindset. An average market return around 8% sounds reasonable on paper. And honestly, that number usually feels optimistic enough to keep people motivated. But lifestyle inflation often rises even faster at 10 or 12% every year. In many cases, compounding loses momentum before it even meaningfully starts. Most people never notice because the system feels normal while the math quietly changes underneath. Everything around them still looks completely ordinary, so the warning signs stay invisible. Then one day, 40 arrives much faster than their financial stability ever did. Personal finance sounds like a math problem, but most people are actually fighting emotional survival every month. Most financial decisions are driven by stress, not spreadsheets or long-term planning. People rarely panic sell because they are irrational investors or ignorant about volatility. They panic because rent, insurance, and debt payments continue no matter what markets do. Many people fail to stay consistent with investing because their lives already feel financially overcrowded. Consistency becomes difficult when every paycheck already has a job before it arrives. Without any financial buffer, small problems quickly become emotional emergencies. And without margin, even ordinary decisions begin to feel risky and exhausting. A narrow financial life quietly turns every unexpected expense into a personal crisis. That is why many people stay in jobs they emotionally checked out from years ago. Burnout feels normal when recovery time becomes more expensive than exhaustion itself. Some people avoid opening their banking apps because the numbers feel emotionally heavy. For many workers, the balance on the screen represents far more than simple money. It represents security, flexibility, and the ability to breathe without panic for a moment. Modern financial security now costs far more time, energy, and emotional stability than people expected. And the internet still pretends the solution is only better investing discipline and perfect habits. Most people think the answer is improving their portfolio, but their real problem starts much earlier. A better portfolio cannot fix a life that already feels financially overloaded every month. Stock picking looks exciting online, but most people are still trying to survive ordinary expenses first. Even crypto strategies sound less important when your monthly cash flow already feels fragile. The real thing that needs repair first is financial pressure that quietly controls daily decisions. The smaller your monthly pressure becomes, the more time compounding finally gets to work. Wealthy people often appear patient because their financial runway gives them room to wait. Patience in investing often has less to do with personality and more to do with survival pressure. People with financial margin are not forced to sell assets during painful market drawdowns. They are also less likely to panic when layoffs suddenly interrupt their income. Financial runway gives people something modern life rarely provides anymore, which is breathing room. And having more runway quietly changes almost every financial decision people make. Some of the best investing outcomes come from simply not reacting during volatility. Financial calm rarely comes from motivation videos because motivation disappears faster than bills do. Real financial stability usually comes from having enough margin between income and pressure. And unfortunately, that kind of breathing room is becoming harder to afford in modern life. Two people can earn the exact same salary and still experience completely different levels of financial stress. The first person quietly spends every dollar required to maintain their lifestyle. The second person lives slightly below their income and protects a small amount of financial margin. Socially, they look almost identical because modern consumption hides financial reality very well. Financially, though, one person is surviving while the other is slowly building optionality over time. The first person cannot afford to lose the job because the bills already consume next month's paycheck. The second person can say no because a small buffer creates psychological stability. And the ability to say no is often the first real version of financial freedom. That is what investing quietly buys over a long enough time horizon. Not yachts and not luxury lifestyles that usually disappear during the first serious drawdown. Real wealth often looks more like reduced panic than visible status. It creates space to breathe before making decisions under pressure. It creates enough stability to think beyond next week's expenses and short-term volatility. It reduces the feeling that life is permanently running behind schedule. In modern life, even emotional stability now feels like a premium product. And that quiet sense of space may be more valuable than most status symbols people chase today. Investing still matters because long-term compounding can quietly improve your future over time. But investing is not the foundation if your daily finances already feel unstable. Investments usually amplify whatever financial condition already exists underneath them. When your life is stable, volatility feels manageable and long-term investing becomes easier. But when your life feels fragile, every market drawdown starts feeling personal. That is why some people build wealth from markets while others only build anxiety. The investment products may look identical, but their financial breathing room is completely different. Modern life quietly punishes people who live without financial margin or spare time. Everything keeps getting more expensive while human mental bandwidth barely changes at all. So maybe your first financial goal should not be becoming rich as quickly as possible? Maybe the real goal is escaping survival mode before thinking about aggressive growth. Because long-term compounding feels powerful only after your financial leaks finally slow down. Most internet finance advice skips this part because survival math is not exciting content. It is easier to sell dream portfolios than explain emotional stress from unstable cash flow. Real financial progress often starts with smaller, quieter changes nobody posts online. And that quiet stability is usually what makes long-term investing finally feel sustainable. A lot of people believe investing will eventually rescue them from a life that already feels financially exhausting. But sometimes the real problem is not the portfolio because the life underneath it is already unstable. The market can compound money over time, but it cannot repair long-term burnout from modern work. Volatility in the market is stressful enough without carrying high-interest consumer debt at the same time. Even a solid long-term strategy struggles when your daily life has no financial breathing room left. But once the pressure slowly decreases, the entire relationship with money begins to feel different. That is when compounding finally has enough time horizon to quietly do its real job. And maybe for the first time in years, you finally stop optimizing survival and start living again. Subscribe to The Margin if you prefer calm finance conversations that explain the uncomfortable math behind modern life. Because sometimes the biggest financial risk is building a lifestyle that becomes too expensive to emotionally sustain.